Welcome back, everybody. You're watching Taking Stock on Bloomberg. I'm Carol Massar in for Pim Fox this week. Now, energy stocks pulled down the S&P 500 today as oil dropped for its fifth day in a row. But crude still up more than 65% over the past 12 months after drastically falling as the financial crisis hit in 2008. Now, today, the Texas-based oil and gas company Range Resources set its production growth targets for this year and next year. Joining us right now is the company's CEO, John Pinkerton. John, we talked about oil, but you guys really are a natural gas player.
That's correct, Carol.
Predominantly. Natural gas prices, I should say, haven't seen the run-up that we've seen in oil. They're down about 25% so far this year. What's your outlook for natural gas prices?
Well, it's going to be interesting. The good news is the consumers are winning. I mean, gas prices are down, so
right.
And you know, the cure for low prices is low prices. I think, you know,
because you think you ramp up demand for it.
Well, correct. And what's happened is that there's been a paradigm shift in our business with all this new technology that people are using to unlock these shale plays.
Right.
We're a perfect example. Range has discovered the Marcellus Shale up in Pennsylvania, and some people believe it's going to be one of the largest gas fields in the world. So,
what do you think?
I think they're right.
What's the value of it to you?
Well, it's enormous to us. We're a 3 TCF company in terms of gas reserves, and the resource potential of the Marcellus is somewhere between 25 and 27 TCF net to the interest in the acreage that we own.
TCF, explain for those viewers who might
trillion
not know.
cubic feet of gas.
Got it.
So I mean, it's a huge find for us. If you think about it, there have been 3 what they call giant oil and gas fields found, or 2 giant oil and gas fields found in the last 30 years, and this could be the 3rd. So it's pretty special for Range and its shareholders.
Now let me ask you, because we had Reliance Resources per acre, the price that they paid was a little bit over $14,000 an acre for Marcellus Shale gas leases in Pennsylvania. I'm just curious, do you think how much more is it worth, or do you think $14,000 an acre is a good price?
Well, I think that was a great deal for Atlas. But a couple things that I think that differentiate ours. One is our acreage position is twice as large, so I think that would command a higher price. The other thing is there's about 600 wells been drilled within the bulk of our acreage now, so it's largely de-risked. So, you know,
so worth $14,000, or is it worth a lot more than that?
I think it's worth a lot more than that.
How much more?
You know, several times more. Again, it's bigger. It's been de-risked, and also our acreage is in what they call the wet gas window.
Right.
So our gas is 1,400 BTUs, so it comes with a lot of liquids, and so that, to give you an idea, at $5 natural gas prices, by the time you add in the liquids, that equates to $7.28. So we get about a 40% uplift in our revenue because we've got the liquids in it. Let
me ask you though, these prices that you're seeing for the acreage for Marcellus Shale, I mean, does it make you, what you guys have about 900,000 acres?
Correct.
Okay. Does it make you want to sell any?
Well, no. I think my job is to make our shareholders rich, not somebody else's shareholders. And if you're
going to get rich by holding on to it rather than selling it.
And I think what we need to do is develop it. We don't need the capital. We've got plenty of capital. We need to ramp up our team and then ramp up the play. If you take what Reliance paid Atlas, just our acreage in the southwest portion of Pennsylvania would be worth $53 a share. And our stock's close today around 50. So just that one trade validates, but we own 1.3 million acres in the play, of which about 900,000 is in what we call in the fairway of the play.
Right. John, so, go ahead, forgive me.
So, and then if you take the rest of the acreage, it comes out, if you do all 900,000, it's $80 a share plus. So I think it gives the market a real view of what people are starting to think about these shale plays, especially what people think about North American natural gas long term.
All right, well, you give us a lot to think about when it comes to Marcellus Shale. Thank you so much, John.
Thank you, Carol.
Appreciate it. John Pinkerton, CEO of Range Resources.